Hello, my name is Michael Valley, and today I'm going to go over how to get compensated for referring loans inside of One Real Mortgage's Originate program. There are 3 different roles and 3 different compensation tiers that are available to you. So if you are a realtor, a loan officer, this could be a very lucrative opportunity for you. So first off, I'm just going to go over the fact that the company is solid. Over 1,100 5-star reviews on Google. You can see them here. Phenomenal. And you're welcome to read through those. We'll provide the link below. You can dig into those, what customers, other realtors are saying. This company is rock solid and has a 14-day clear to close guarantee. But as far as generating loans, if you're on that side of the business, I mean, how many times as a realtor have you referred a loan to a loan officer and they can't compensate you because it's illegal, okay? But what if you could make 40% of the loan compensation for doing that simple thing, sending out a link, the link goes to your internal loan officer, and you're compensated. Okay, well, I'm going to go over some of these different compensation charts, both first from a loan originator outside role, if you are a loan officer, what it means to you financially to receive be in the inside role and what that compensation looks like. And then it also, if you are with One Real Mortgage, you are a loan officer and you do business like you're doing now, that's 100% a lead or a loan that you generated on your own. So we're going to do the 40%, which is what the referrer makes, the outside role. 60% the inside role, that this would be business that would be coming to you as a loan officer from one of our 30,000 real estate agents, and from the outside role, that's a loan originate program. And then what the compensation would be for if you were just a loan officer doing 100% of your deal. So let's go over some of these numbers. So first off, I base this on the average house price in the United States, $410,000. So if your prices in your area are higher, these numbers are going to be higher. If they're lower, they're lower, okay? And so if you just did one deal as a One Real Mortgage loan originator on the outside role, that'd be $2,050 per month. You can see that here. If you did 5 deals, it'd be $10,250. 10 deals, now you're getting into some serious money, $20,000 and $20,500. If you did 20 deals, if you referred 20 deals, let's say you're a real estate agent, you do the criteria to get certified for this program, but you're doing 20 deals, you could add an additional $40,000 to your bottom line every month, $41,000 to be exact. So what does that look like on an annual basis? So if you did one deal a month and all year long, it would be $24,600. You can follow along here. 5 deals per month times 12 months, that would be $123 extra $1,000. If you did 10 deals per month that you're referring to your inside rep, they're doing all the heavy lifting, that would be an extra almost $250,000 per year. And then if you're doing 240 transactions per year that you referred, which is 20 per month times 12 months, that would be almost $500,000 in compensation just through this one program. Now that's from the outside role. Let's talk about the inside role. So let's say you're currently a loan officer and all of a sudden you're doing your business and you're going to get these windfall referrals from these from the licensed MLOs that are on the outside. They need an inside loan officer to be processing these loans. So you'd have your normal stack of business and then you'd have this business. And so just for one deal that comes in, windfall, you didn't have nothing to do with it, but it comes in as a lead, $3,075, as you can see here. You can follow this along, 5 of those a month, $15,375 on top of what you're already doing. 10 deals a month, falling in your lap, $30,000, $30,750 for just for processing the loan. And then or 20 per month is $61.50, okay, per month. Let's say you have a few of these. So you have 3 or 4 of the outside reps that you're dealing with. You just get 20 of those deals in. They're all incentivized to do it. You're incentivized to do it, to process those. That could be an extra $60,000 in your pocket. Carry that out annually. 1 per month is $36,900, and you continue to climb up. 5 per month all year, on average every month for 12 months is $184,500. 10 per month, $369 per month. These are things that are coming on top of what you're already doing. 20 per month all year round. It's going to be $738,000 for business that you didn't generate, that's fallen in your lap from the outside rep world. So there is a ton of opportunity here. And there's also, so basically this is all based off of 1.25 basis points of the loan. And so let's just say you have your traditional business you have now that you didn't get referred. It's not part of the Originate program. You're just processing loans as a One Real loan officer. You just for one deal, you would make these are all based again on the average of a $410,000 house or $410,000 loan. And so the result would be $5,125. Do 5 of those a month, 5 deals a month at the average price, average loan amount, be $25,625 as you can see here. 10 it'd be 51, 20 it'd be 100,000. So you do 20 deals a month, you can make $100,000 per month, and then carry that out to annualize. So 1 per month for 12 months. Obviously that's a little bit low, but you'd be making $60,000. 5 per month times 12 months is $307,500, or 10 per month, and you would be at $615,000. At 20 per month, 12 months of the year, you'd be rolling in some serious bank, $1.2 million. So now, if you want to find out more about this program, dig deeper, I'm going to go ahead and hand this over to Samir, who this is a recorded webinar for you to dig into this program and what that looks like for you. So basically it's about 40 minutes, and he's going to get into the intricacies of the program, how it works, and then from 40 minutes on is questions and answers if you want to stick around for that. And if you want to get involved in this, let's set up a live call with Samir or Nate, our Vice President of Sales, to see if you qualify. Go ahead and answer your questions that you may have about this, what the process looks like, all of that, how would your loans be processed, whatever questions you may have. Go ahead and click the link below to get in touch with me, Michael Valle, and I look forward to discussing. We're very excited about this. We're open in 20 states. We plan to be open in the remaining 30 here soon. We've got some great technology that's coming on board, which is really going to link and provide a lot of value for the end consumer, but it's really going to link the real estate side with the title side, with the mortgage side. So look forward to meeting you down the road. Go ahead and click the link and let's explore this together. All the best.
All of you. My name is Samir Dedia, first and foremost. Some of you may or may not know me. I know I see a lot of familiar names here and familiar faces, so it's great to see you all again. But I'm CEO of One Real Mortgage. We're here to help our real agent partners win more deals. This is just an extension of that theory and that thought process that I have of how can we help our agents continue to build, continue to win more deals with the help of One Real Mortgage. So a couple things just to start off with before I'm going to dive into how this process works. What does it mean? There's a lot of nuances around it. There's a lot of speculation and things and news that maybe you hear around being duly licensed. So first and foremost, Real Originate was a program created to help newly licensed loan officers, existing licensed loan officers, be able to monetize their existing, network, their referral network, their pipeline, whatever it may be, with mortgage. This doesn't necessarily mean that this is a straight referral, right? This isn't something where you say, hey, hand it off to Nydia Torres, who's my loan officer, you'll get paid. This is a way to remove the heavy lifting from the normal, day-to-day of what loan officers do. Obviously, the theory is be able to kind of share in some of the tasks and the requirements and needed in order to get compensated as a loan officer, but really removing the heavy lifting. So let me just go forward here. This is our vision, our mission. Real quick, just to get to know us a little bit, using the power of technology and the power of people, rather, to remove the friction consumers face in a complicated, antiquated process. Look, we know at Real, we're here to build something larger than ourselves, right? We're here to give an amazing consumer experience to all of our clients. That doesn't just mean technology. That means people, right? In my opinion, there's nothing wrong with real estate agents, loan officers, title producers, all being licensed under all of the umbrellas of real estate. I think that's a great value add for your clients. And especially on the buyer side today, we see that more and more. Sometimes there are some nuances and some thoughts like, hey, I don't want to let the client know that I'm also a licensed loan officer. Embrace it. Really add value to your clients and why you're a loan officer. It's not just to make money, but it's to offer insights. It's to offer value. It's to offer, refinancing opportunities to them to help them save, right? At the end of the day, clients look at our real estate agent partners as their biggest advocate and advisor. So Real Originate is not only for real estate agents, it just fits really well with real estate agents. It could be for anyone who's looking to get licensed and not do the heavy lifting. Our vision, just so you know a little bit about us on the vision side, is currently our average clear to close, from submission to clear to close, is about 15 to 17 days. And we do a lot of different types of loans, not just your VA, FHA conventional. We do everything. And so I want to take that goal, that vision at some point in time to go from contract to clear to close in 7 days or less, right? That's going to take time over the years to kind of keep enhancing our technology and our process, but that's where I want to go. So when we speak to a lot of real estate agents or others who are looking to get licensed in a part-time capacity, these are the same pain points that keep coming up every single conversation. I don't want to get licensed because there's an increased workload as a loan originator. Hell, I don't have time to sit there and go through an application and figure out what documents are required, what the products and pricing should look like. I'm great at kind of educating them at a high level and talking high level about mortgage, but I may not have the time to really invest in being a full-time loan originator. Compliance. Is this really compliance? What states require or what states allow it? What does it mean to be compliant? Like, how do I make sure that I don't go across that compliance line and get in trouble? And also the last one is the lack of knowledge on getting your mortgage license, especially for real estate agents. One thing that pops up is like, hey, to get licensed in real estate, it's grueling. It's time consuming. We have to do everything ourselves. We've created this model to really hit on all of these challenges to reduce the heavy lifting of being a loan officer with One Real Mortgage in a part-time capacity. Now, I will preface this by saying there are real estate agents who are also full-time loan officers with us who do all of the heavy lifting because they've been doing it for years, right? But it depends on what your preference is. It depends really on what you're looking to accomplish. And can you be in a Real Originate role and eventually go to a normal full-time loan officer role? Absolutely. Whenever you deem comfortable, right? To be able to take on all the tasks. But I look at Real Originate as a great opportunity to remove the heavy lifting and maybe even start off as an apprenticeship style role as a loan originator. So if you think about your current process today as a real estate agent, pretty much what happens is, and correct me if I'm wrong, and guys, feel free to chime in and put things in the chat, whatever you want. Let's make it conversational and fun for all of us here. But here's what typically happens. Real estate agent has a client. Client's looking to buy a home. You're asking them several questions. Have you been pre-approved? What's your budget? What area do you want to buy in? How much of a down payment can you afford? All of those questions are being asked, which, by the way, a lot of them cross paths with mortgage, vetting those clients and really understanding what their goals are. You connect them with your preferred lender. Preferred lender goes through pre-approving them, going through products and pricing, right? You've given some information to your lender already saying, hey, here's what they're looking to do. Can we help them out? Here's some concerns they have. Can we help them out? You're already working in a team environment with your lender. Now that lender is pretty much taking that loan or that pre-approved client all the way through to the finish line, right? At the same time, you're most likely already getting updates from your client who's maybe even coming back to you saying, hey, Chris, Nydia told me about this. Is that true? Does that make sense? They're coming back to you because they trust you, right? And they want to make sure that they're getting the right information. But they're also moving, you're also getting updates maybe from the technology side, right? Updates on milestones. You're getting updates from the loan officer. Hey, the appraisals come in. We're good to go. Hey, we're clear to close. Whatever those are, you're still involved in the mortgage process in some capacity, right? Does that make sense so far? You guys agree? You all agree? Thumbs up? Okay, great. So when we looked at Real Originate, said, how do we take the existing model that they're used to and really mold it and make it compliant in a way where they can benefit? So what we did was we said, look, we don't need to have just one loan officer. We can split the loan officer role into two. Think of it like an outside sales rep and an inside sales rep who are working hand in hand and really helping each other out and getting through this process to kind of make sure their client is taken care of. Now, yes, up front, you would have to send out the application link, right, to your client, or the internal LO can send it out on your behalf. But ultimately, in order for you to get compensated, the application has to be under your name. That's number one. There's also in mortgage loan officer compensation rules, there's a certain amount of tasks that have to be performed. You can't just say, hey, Dan Reese, talk to my client. No, there has to be a little bit of vetting and questions and kind of knowing. Now, the great part about 2024 is technology does a lot of that heavy lifting for us, right? The application comes in, documents are uploaded. The application will stop the client if things are missing. All of those things happen. But now you're working hand in hand with your internal LO to make sure that that's moving along its way. The internal LO takes over as if they normally would in a normal situation with your preferred lenders. They'll process the loan, they'll set up the loan, they'll lock the rate, they'll coordinate closing with our underwriting and processing teams, all with you still knowing what's happening in that loan and just being alerted. So the bulk of the work always happens up front, the licensing and sending out the link. But the great part is now you're able to legally get compensated, right? Because you're doing tasks as part of the transaction and you're licensed as a loan originator and your name is tied to that loan. So now I've heard certain, loan officers or real estate agents tell me, I don't want my name on the file. Can I just get a referral fee? Yes and no, right? Here's the challenge that we face as an industry going forward. There's a lot of eyes on real estate agents today. There's a lot of eyes on the transaction today. There's a lot of eyes on loan officers and real estate agents today. We want to be as compliant as possible without having anyone kind of dig in and start poking holes and try and figure out ways to sideline or make everything go sideways. So what we want to stay uber compliant is everyone who gets compensated with us must be a licensed loan originator. Their name needs to be tied to that application in order for us to get compensated. If there is a referral, there needs to be really good justification. It can't be the norm. It has to be a one-off and the reason why we're going there. We can kind of address those on the side, when those happen. But the cool part is here now, you're adding value to your client. You're helping them with advice. They're already looking at you in this, in this light of saying, hey, real estate agent, I know that I have to get a loan. Who do I go to? And if you think about it, a lot of clients may not even know that what the mortgage responsibilities are, what the lender responsibilities are, what the interactions are. This puts you front and center to really navigate, dictate, and also monetize this process. How do you monetize it? So typically we pay out about 1.25% in total to our sales team. That's for loans that they close if they do all of the work. We leave it up to the external and internal loan officer to figure out what that split should look like. Typically what we're finding right now is the external loan officer is going with 0.5%, 0.5%, or 50 basis points. The internal loan officer, because they're taking on a lot more of the heavy lifting, are getting compensated 0.75%. Ultimately, that's a team decision between both of you to figure out what you want that structure to look like. Who can the internal LO be? It has to be a licensed individual with One Real Mortgage. That could be someone that's already working with us today, or it could be someone that that may want to come over to One Real Mortgage. And there's opportunities there, which I'll get to a little bit later, but that's also possible. When I speak to a lot of real estate agents, I advise them, I think the best way to start off is to let us try a few loans for you. Let you understand our process. Make sure you're comfortable with it before you dive in. But that's how the compensation structure is set up. I'll pause real quick because I said a lot of things. Any questions so far on what I've covered? No? And feel free to stop me. Be like, Samir, you don't make any sense. Tell me what the hell that even means. And we can always talk further, right? And kind of go over different questions and scenarios. And in particular, we can even cover it with our, hop on a separate Zoom call as well to go over these things. But if you look at it, the workload is the biggest challenge to me. The number one challenge is the workload. We don't want to take on significantly additional work. This solution solves for that. It's also compliant because you're licensed, your name's tied to the loan, and your compensation structure is set where you're doing a specific amount of work, getting paid accordingly, and you also, the internal is getting paid according to the amount of work they're doing. And that's really the compliance piece of it. The last piece is the licensing challenge. And so we work with a third-party licensing company called MLG. We work with them for about 14 years now, I think. And they handle a lot of the heavy lifting around the licensing piece. They'll literally hold your hand and tell you what you need to do to get your license. Whether it's the initial 20 hours of education is always required on the federal side. So if you think about it, there's federal requirements and there's state requirements. So under the federal requirements, there's 20 hours of upfront education that's required. That can be done online or in person. That can be done through our vendor or not through our vendor. It can be done through, there's a lot of other companies out there that do this, but we have preferred pricing with our vendor. So it'll probably be more economical to do it through our vendor, but they can set that 20 hours up with, over the span of 3 days, 7 days, 10 days, 14 days. Typically 14 is the max where you have to finish that 20 hours of education. They also give you a test prep course to practice for the actual exam. Now, keep in mind, when you're doing your 20 hours of education, there are quizzes and tests that pop up just to make sure you've retained the information. But that you can keep clicking and trying again. That is not the actual exam. The great part about mortgage is that there's one national exam. You don't have, once you take the exam, you're done for life, unless you forfeit your license and have to come back. But you're pretty much done when it comes to the exam. The cool part about that is with mortgage is that if you want to get into other states, you don't have to take an exam again. You just have to do the required upfront education and maybe some background checks, some fingerprints. Once you're done with all of those two things, you'll have to do the state requirement piece. So typically, give you an example, maybe Texas or Florida or California may have 2 to 3 hours of upfront education for that state. And they have different requirements on the background checks. That's also state requirement. So again, federal requirements are the 20 hours up front and the national exam. State requirements are the upfront education, maybe a couple hours, and the background checks, whether they're live scan fingerprints, fingerprint cards, all of those things, just so you know, MLG, the third-party licensing company we use, handles that. They literally tell you what needs to happen when. As long as you do the things that they ask you to do, maybe it's answer a question, fill out a form, whatever it may be, they will take everything to the finish line and even work with the states to make sure that your license is approved. If there's things that pop up from the state with questions on, hey, Jose, you had this thing that popped up, what do we do here? They're going to work with you to get that done. Jose, I think you may have a question. I see your hand raised.
Yeah. I was going to ask you, is there, like you mentioned earlier, like, hey, you never know when careers will change, right? If you ever want to go from a real estate to a loan officer, is there any kind of avenues where I would be interested as a realtor to see more behind the scenes training, what you guys typically do in-house on an everyday basis?
Yep.
Like, I would be interested in seeing that little by little,
Yep.
just to kind of get a glimpse of what that looks like,
Yeah, no, and I think the Real Originate model helps with that, right? So it gives you an opportunity to work with an internal LO, understand the process, get some reps in, and then if you ever want to go move on and be a full-time LO, right? And we say full-time in like this weird way, but basically it's not a Real Originate LO, right? We're taking on the full responsibility. You're not working with an internal partner or internal loan officer. To me, like understand, because the thing with mortgage, one thing we all have to keep in mind, it takes years to really understand the nuances of mortgage, right? And as products get more and more complex, having a grasp on how to understand those products, how the products work, educating your consumers, it takes time, right? So I always tell people this is a great way to get a taste of both worlds, right? You're making a little bit of money. You're also kind of getting educated on how the loan officer side of the business works. So that's, I don't know if that answers your question, but to me, the pathway should be Real Originate, and then you go into full-time, because there's a lot to take in as a loan officer, especially in the beginning. It can get very confusing if you haven't done it before.
Yeah, for myself, it's been about 20 years since I used to be a mortgage guy. So,
yeah,
pricing sheets were coming through a fax machine.
Well, that's the same with me, right? So I was 20 years ago, I started in 04, so very similar. But yeah, again, and it's all up to your own comfort level, right? So if after 6 months, after a year, after a few, there's no hard and fast. If you feel comfortable taking on and do it yourself, by all means, go for it, right? Then you'll make the full 1.25%. in that situation. So back to the licensing piece, MLG handles everything. Now, you might be asking, this is great. How much does all this cost? So total upfront cost for your license, for your exam, for working with MLG takes $200 to handle it. You don't have to use MLG, by the way. You can do it on your own if you want. It's optional. Same thing with our education vendor. You don't have to use them. It's just a preferred vendor that gives a little bit better pricing, but MLG can handle everything for $200 per state. The additional cost for the state depends on the states. The actual safe exam usually is about $120, but all in all, I would budget about $600 to $700 approximately, depending on state, for your upfront costs. After you've gotten licensed, every single year, there's what they call continuing education, which can be done online again through our vendor if you prefer, through any other vendor, which is about 12 hours. It has to be done before the end of the year. So you have about, most people do it in December. They finish off their education at that time when it's a little bit quiet and they get done and their license renews. And typically the state will take, the state and the NMLS, who's the National Mortgage Licensing Service, will usually take like total about $100, $120 annually to maintain that license. Obviously, the more states you have, the more expensive it will be. But the thought is you hopefully should be doing the volume to support that, right? Now, when it comes to volume, just keep in mind, on the Real Originate, under that role, you will be a part-time W-2 employee of One Real Mortgage Corp. If you come on as a full-time, you will be a full-time W-2 employee of One Real Mortgage Corp. Some of you may be saying, well, that's crazy because half of the country, maybe you know or don't know, allows for 1099 loan officers. Absolutely. We know that California is a big one. But here's the insights we get from our attorneys that work very closely with FHFA, CFPB, HUD, you name it. Those things are going to change over the next upcoming years, right? If you think about this, 1099 means contractor, right? In real estate, a real estate brokerage can pay an entity or someone as a 1099. In mortgage, we cannot pay an entity. We have to pay an individual, right? The licensed individual tied to that loan gets paid. Now, what most people are saying in the noise that we're hearing out of Capitol Hill and other organizations is that, wait a second, how can a loan officer be a 1099 loan officer? Like, they have to be a W-2 because they can't work for multiple mortgage companies. That's what's probably coming in the next few years. Even though it's a state decision and half of the country allows for 1099, we are going to see an overhaul going to W-2 for loan officers, which is why we go with a W-2 model. Now, they're commission only. There's no draws. There's no salaries, which makes it important from the volume perspective, right? The model, we usually hold, if you're part-time versus full-time, we hold production requirements on mortgage, right? Now, again, when I say production, this can be purchase, this can be refi. It doesn't need to be only purchase. It can be both, right? A lot of you have huge databases of clients that you can probably go back to and maybe even refi now. Maybe you can refi them in 6 months. So as long as from a part-time perspective, if you're closing $4 million in mortgage production annually as a part-time, we're fine. Just to give you a context, that's about $350,000 a month in mortgage volume, right? So this model works out well. It also helps when you're doing the volume. It doesn't make things so tough to see, should I spend the money or not, right? So you look at this model as a way to monetize your current referral network or your database. That's where this model works really, really well. Not to say that if you're not doing that volume, there's not opportunity. There's always opportunity. Is that if you start getting in a groove and you know that you're getting one deal a month at $350K on average, maybe if you're not there yet, reach out, right? And then we can see where we're at and see if it makes sense to come into Real Originate. Also, you may be really good at attracting, but you may not be great at production. Maybe you have a team, right? There's opportunities there. So this is a case-by-case basis, but we always ask that if it's you and or your team, right, coming in, we're getting some sort of volume coming in because we don't want to flood the gates and have just a lot of non-production, right? If we look at Real's model in the real estate side, it's all production based. We all win if production comes in. So just keep that in mind as well. These are the states that we're in. Now, the goal eventually over some course of time is to be in all 50. Real is in all 50. We want to be in all 50. If there's opportunities in your state where we can come in closing 7 to 10 deals per month, and we're not there yet, let us know. We'd like to have a discussion and figure out how we can enter that state, whether it's through maybe loan officer partnerships that you have, whether it's through your production, other people's production, team production, whatever it may be. Just so you know, currently today, we are working on getting in Virginia, Maryland, Tennessee, Illinois, and Utah, right? Those are the 5 heavy hitters where we have a significant amount of interest for volume to come into those states. But if there's other states, like I'm talking to some folks in New York, Indiana, Wisconsin, we're trying to figure that out. We'd like to get in sooner if we can, but we want to make sure there's production to back it up. The other thing to highlight is we are a mortgage broker. So we are eventually going to be getting back into lending. We were a lender before. We kind of went broker because the market changed and it's very expensive to be a lender. But over the course of time, we will be moving into lending. We are a broker, but even if we move into lending, the idea is to keep our broker license for specific products that we can help our clients with, right? The ultimate goal for us in mortgage is to not have to turn away a client if there is a product that exists, right? Initially, at the start of this call, I said, we're here to help our partner agents win more deals. We don't want to just put ourselves in a box and say, these are the only deals we do. If there's opportunities to get into other products, we will do that. I'll give you a great example. We had a loan officer join us from the state of Washington. She deals with super jumbo home buyers, right? In the $5, $6, $10 million range. We didn't have a lender at that time. She mentioned the lender that she was working with. Within 1 week, we onboarded that lender, right? So we're always going to find opportunities to help you win more deals. I tell this to people all the time. We're probably now close to 1,100 5-star Google reviews, but check us out. Hear what people are saying about us. If your clients are even like, who's One Real Mortgage? Great reference point to hear what other agents and clients are saying about One Real Mortgage. Level up. So here's where it gets a little fun and exciting. I don't know if you all know or don't know, but as a loan officer with One Real Mortgage Corp, you have the ability to participate in our 5-level mortgage rev share program. Okay. Now, this rev share program is tied to production for full-time loan officers, not Real Originate. So for example, if you recruit a bunch of Real Originate loan officers and there's still Real Originate loan officers at the time, like there's no rev share we are going to pay for compliance purposes. And that's a whole different story, which I don't have the time to talk about. But the decision has been made for now in 2024 to kind of steer away from that side and just focus on full-time. However, a lot of you know full-time loan officers. They're probably calling you every day, asking you how things are going. And the reality is a lot of loan officers are looking for opportunities similar to what we have at One Real Mortgage, similar to what Real built on the real estate side. So this is how our rev share program works. We pay in basis points, only because we don't pay as a percentage of revenue because we don't pay out 100% on our commissions. We have our margins set. So this is the easiest way to explain it to, especially loan officers on how we pay as basis points. To give you a quick example, if you have a $300,000 loan that you've earned rev share off of, and it's your level 1, you will get 12 basis points, which is equivalent to $360, right? So 0.12%, so 0.0012. Level 2 is 8 basis points, 3, 2, and 1.5. Now, there's unlocking tiers, similar to Real, right? On the real estate side, we tie ours to obviously to loan officers, right? And this loan officer pool could include any type of loan officers. So just so you know, whether they're Real Originate, they're just part-time, they're full-time, whatever it may be, those loan officers can be there to unlock your tiers. They can also be part of your network as a conduit to get paid rev share on full-time loan officer production. So for example, let's say I recruit Jose, who's a Real Originate loan officer. Jose recruits Dan Reese, who's a full-time loan officer. What does that mean for me? That means I will only make, as long as my tiers are unlocked, I will make 8 basis points level 2 on Dan Reese's production, but Jose will make level 1 because that's a regular full-time loan officer. I see hands being raised. I'll pause real quick there, but go ahead, Christine or Jose, whoever wants to go first, go for it.
Hi, okay, I think my question was, can you, being an external loan officer, it has to be with your own personal clients as a realtor? Like, as a realtor, could I be the external loan officer if, let's say, I could help someone else, but within Real, like another Real realtor, but they're not an external loan officer? Like,
So-
can I help other people, like other clients other than my own?
Oh, yeah. Look, if you're a licensed loan officer with us, your clients
Yeah.
are your clients on the mortgage side. So whether they come from, your real estate portfolio, whether they come from people that you met at dinner, whether they come from, at the end of the day, this is a mortgage program, right? So wherever you get the clients in from, to close on mortgage, that's what you earn. So the clients can come from anywhere. And Christine, I don't know if that's what you're asking, but that's what I was under. Is that what you mean?
I don't have to be the one, the realtor on the closed transaction. Let's say if I met you and you have an agent with, let's say, Remax, but they like me and I'm like, look, I can help you with this. I can bring them in, even though the transaction will be paid through Remax, like their agent through Remax, but I'm through Real Originate.
Yep.
That's what I meant.
Yep. So, and it's a great point. I'm just going to pivot, guys, real quick to go back here. So you don't have to be on the same transaction to earn. Ultimately, that's your mortgage client. Think of real estate separate, mortgage separate. Where this works well is when you have your own clients that you're already working with and they already trust you, right? However, you could be, Christine, working, you could be out to dinner with a bunch of friends and maybe rates have fallen and none of them you've worked with before. That's refi opportunities for you, right? And so at the end of the day, production is production. It doesn't matter where it comes from. That's your clients. There's no restriction on where the production should come from. But one other thing to highlight, team, which I forgot to address, and I apologize. There's no states that say you can't get your mortgage license and have your real estate license at the same time. But there are states that say you can't be a loan officer and a real estate agent on the same transaction. So now, you can obviously hold both licenses, no issues there. But there's 9 states, just so you guys know: Connecticut, Louisiana, Maryland, New York, North Dakota, Ohio, Utah, West Virginia, and South Dakota. I didn't write it down because this is all going to be recorded, so you can go back to it. But essentially, those are the only 9 states that don't allow you to wear 2 hats on the same transaction. So now, in those cases, what some may do is say, hey, I already have my internal LO, you take it. Maybe I have a refi, I'll put that under my name. However you want to structure, that's up to you. But essentially, you can have both licenses. I know there's a lot of confusion on that. Like, hey, is it allowed in my state? I think someone reached out from Ohio to me earlier today and said, hey, is it even possible? Yes, it's possible. But in the state of Ohio, you can't be a loan officer and a real estate agent on the same transaction. Does that all make sense? I know there's a lot of noise around that, so. Okay. Jose, I know you have a question. Oh, can't hear you. You're muted.
Okay, can you hear me?
Yep.
Okay, I just wanted to apologize in advance because my brain is processing everything you're saying.
It's all good. And this is like,
everything.
and again, it's gonna be hard for all of us to grasp all this at one time. So look, I'm here as a resource. Hit me up later. We can always go through whatever. Like we can set up time to talk through. And we have a lot of our great loan officers who are well versed in this as well. If you're working with any of our loan officers today, reach out and be like, hey, what's this about? Right. And they'll be able to explain it as well. But go ahead, Jose.
Okay. Christine actually had me pop up another question, and you might have already said it. If I know realtors in Minnesota, I can give them my link and there would be credit for that, right?
As long as you are licensed as a loan officer in Minnesota.
Gotcha. Okay.
So, which you can do. Most states don't have a distance rule, just so you know. South Carolina is a little interesting where they have a 75-mile distance rule, but most other states that we're in, maybe Mississippi has like a 120-mile distance rule. You don't have to be tied to a physical office. So if you're, let's say you're licensed, where are you, Jose? You're in California, I think, right? Florida, sorry. So Florida, for example, doesn't have a distance rule. So you would tie your license to our corporate address, which is totally allowed. And then if you want to add other states, let's say you have opportunities in Minnesota, you'll fulfill Minnesota requirements, which could be upfront education, maybe fingerprints, whatever it may be. And then you can monetize that as well. So you definitely can. Now, keep in mind, now you're saying agents from Minnesota, right?
Right.
So agents from Minnesota, if they're not licensed and not looking to make like any commission on the deal from the mortgage side, that's technically like the way to look at it is you're dealing with their clients, right? So they're your clients, that they're like buyers or your clients. So the application would come under Jose's name, right? And then the internal loan officer would basically get tagged as an internal loan officer. They would get their updates. They would know what's happening. They would kind of work with you in a team environment and get that on its way. But from the agent perspective, that's a little different, right? That's kind of more, you can earn, you can't really, I mean, essentially you're working with their clients, right? Is what I mean to say. So like, you can't like, if these agents, like those agents won't get anything out of it, but those agents would refer their clients to you. Mm-hmm. You would be the LO on that transaction, which would allow you to get compensated. So yes, you can do that with their clients.
So even though the internal officer, like if I'm working with an internal officer from Real Mortgage and they have the ability to do loans in Minnesota, I wouldn't count for that.
No, you would, as long as the application comes under your name and you're licensed in Minnesota, which you
But
can
I
be.
have to be as an external,
You would be the external on that, right? Right, like your
or I
normal.
have to be. I
Yeah, yeah,
gotcha.
yeah,
Okay.
yeah, yeah. But
S-
yeah, yeah. So like, so just again to play that out, you would have a client from Minnesota. You would say, "Hey, I'm licensed in Minnesota. Please fill out my application link, and I'm going to connect you with Samir Dedi, who's also licensed. He's part of my team, right?" Now you probably already talked to me and said, "Hey, this client's coming in. This is what they're looking to do. Blah blah blah, whatever it might be." Then you and I would like, the application would come in. I would get tagged. I immediately would start talking to that client, just kind of digging in and asking those kind of like loan level questions, if you will, the deeper questions, and then the loan would close, and you would get compensated your commission on that deal as the external loan officer. So you can be in like multiple states, right? In mortgage, like you don't have to physically be in Minnesota, physically be in New Jersey, physically be in California. If you decided, hey, I'm getting clients from everywhere, a lot of our loan officers are licensed in multiple states, even though they physically live in a specific town.
Gotcha. And my second question, to be participate on the level up structure, did you say you have to be a full-time loan officer? And
No,
then
so
number two,
to
okay,
participate, any loan officer, yeah, thank you for that. So to participate, any loan officer, whether you're Real Originate, full-time LO, doesn't matter. It's open to all loan officers, right? However, what rev share we pay out is based on the type of LO you are, the type of loan officer you are. So for example,
gotcha.
if you are a Real Originate loan officer and I attracted you, right? I cannot earn rev share on your production. Level one, right? Because you would be my level one. However, Jose, if you go and attract like your buddy who's a loan officer in Florida and he joins One Real Mortgage and whatever deals he's closing his normal book of business, you would earn level one because that's a full-time LO. It's a regular loan officer. Again, there's a lot of compliance things I don't want to get into on why we've made a decision in 2024 not to pay on Real Originate. A lot of it has to do with the current environment. Those things could change. But the cool part though is everything is still tagged. So Jose, if I attract you, you're Real Originate, you're still my level one. I'm just not getting paid on you. It's grayed out, right? If you attract some other full-time LO, I'm going to get level two off of that as long as I have 5 in my level one. But you're going to get your level one off of that full-time LO. So a lot of times what happens is the reason we thought of this, right, was because number one, from a loan officer's perspective, they're all about looking for something similar to what Real does on the real estate side, right? And we've seen the Real's growth with RevShare, where it's created a whole culture around community and collaboration. Everyone's working together. Loan officers are looking for the same exact thing. Everyone's looking for their final destination, right? So loan officers, I say this all the time, they're kind of like cousins of real estate agents, if you will, right? They work hand in hand all the time. They have the same needs and desires, but now you may not want to work with one of our loan officers. You may have a great relationship with John down the street. That's great. Let's talk to them and figure out, all right, how much business are they doing? Do they are they able to close like 2 deals a month on average with a 350K loan amount average? Like, let's figure out how to bring them over. And then maybe they could be your internal loan officer. So as long as the loan officer's licensed with our company, it's up to you to decide who you'd like to work with on the internal side for Real Originate. Does that make
And
sense?
do they have to maintain a production requirement to?
Yes. So again, we look at compensating factors, and ultimately we're the ones who kind of decide and determine what those compensating factors are. But typically we like to see at least 2 fundings per month on their end with an average loan size of 350,000. So that is approximately 8 million in production. However, if there's a lot of volume coming in from you, Jose, and he's just bogged down doing all of your internal LO stuff too, that's okay too. There's still value that he's adding, right? Or maybe he's able to attract bigger teams of loan officers. That's also value that they're adding, right? So ultimately, when we look at production, we look at it every 6 months. We kind of see where the trends are, and we don't look at it from a perspective of, hey, you haven't done this, we're cutting you off. That's not the goal here. The goal here is to grow. So then we'll just have conversations, figure out what do you need? How do we help you get going? Are there opportunities here? But we do say, like, to enter the program right now where we are, like, we don't want to flood the gates yet if there's not a traction of production, right? So if you want to become a Real Originate loan officer, if you want to do certain things, like, let's talk about it and figure out, like, are there compensating factors, other areas where we can kind of help. But, production, obviously, just like on the Real model, production is important. Without production, no one's making money. So that's kind of how we look at it from that perspective. The cool thing about our RevShare program, though, as well, so we have the minimum production requirements, which we covered. RevShare only applies to full-time LOs. Whatever they generate, I should say. Like, you can, it's open for everyone, but you're only going to get paid on full-time loan officers. But you can use, any type of role, Real Originate part-time, as part of your network. There's no cap. right? And this was something that I've talked to a lot of people about, which they're like, wow. So if you earn $40,000 to $50,000 in rev share, 10,000 in rev share, whatever the number is, you're going to get paid on all of it, right? We're not capping anyone on a rev share. We're keeping it all the same. This applies to every loan officer that's participating in rev share. There's no cap. So I just want to make sure that is clear. There are some mortgage models that are coming out where they do cap and they have smaller, like lesser amounts of levels. Ours is 5 levels, no cap. There are some minimum production requirements to ensure you continue to receive your rev share. Those are kind of done kind of behind the scenes in conversations with our loan officers to make sure we're all kind of marching to the same beat. And the unlocking tiers real quick. So in order to unlock, you have to have, similar to Real, X number of loan officers, though not agents, in your level 1, right? That could be a Real Originate loan officer, like I said, or a full-time loan officer. So in level 1, as soon as you have the 1, you open up rev share, right? Level 2, you need 5 in level 1 to unlock level 2. Level 3, you need 10 in level 1 to unlock level 3. 4, you need 15 in level 1. 5, you need 20 in level 1 to unlock. But as you can see, out of the total of about 26.5 basis points that we pay, 20 of it is sitting in level 1 and 2. That's where the juice is, right? So if we look at this as a totality, like as Real as a company, we're giving an opportunity to create a model where you can work with your clients closely and create a separate revenue stream through Real Originate. But we're also giving an opportunity for you to grow your mortgage loan officer network, right? By bringing them over to Real. We know that production comes from loan officers and real estate agents, either separate or combined. How do we join forces, which you all are already working with, to bring them over as well? So this is the opportunity that we have here at Real. I'll stop real quick for questions on any of this. I know I threw a lot at you, but you know, it's important. So.
I have a question, Samir.
Yes.
I know you talked about this. I just want to clarify, but in some states, I'm in Texas. I
Yes.
understand that in some states, when you broker in real estate, you cannot also be doing the loan aspect of it. Am I wrong on that?
It depends on the state. I'll have to look from the broker perspective. I haven't heard if you're a broker that it precludes you from being a loan officer. Texas does allow you to be a loan officer and a real estate agent on the same transaction. Is that what you're asking?
Correct.
Yeah, so they do allow it. There's 9 states that do not allow you to do it on the same transactions. The key is the same transaction. You can still get your license and maybe do other deals that you're not a real estate agent on, but those 9 states are Connecticut, Louisiana, Maryland, New York, North Dakota, Ohio, Utah, West Virginia, and South Dakota. Those states do not allow you to wear 2 hats on the same transaction.
Okay. The other question I had, do you foresee having this capping status?
For Real Originate, I'm sorry, for Level Up, for our rev share program?
Correct.
No, I don't.
All right.
Yeah, because keep in mind, right? Real's model is a little bit different. Other real estate companies are different where they pay out 100% at some point, right? We don't ever pay out 100%. But we pay whatever our margins are. Like we pay a percentage of our margin. Any questions? Did I just literally open up a fire hose and shove it down everyone's throat? I hope not.
There's a lot of questions on the app.
Say that again.
There-
All right,
There's a lot of questions on the chat, so
Oh, got it. Okay.
we'll go through it right now.
Yeah, absolutely. I'll try and go through.
Real quick, I just have a question about how it works in California.
Yeah.
So if I were to get my loan officer license, then can I, like, say for example, if I get a client that's like FHA only approved, then would I just in that situation would I just refer that out to another like what's called internal loan officer in Real Mortgage so that I could get a referral fee because I'm licensed? Because from my understanding, in California, we could wear both hats on the same transaction as long as this is not an FHA loan.
So FHA actually changed their ruling in December of 2022, where they do allow it now. So you are allowed to do it. Yeah, USDA actually you're not allowed to. Just so you guys know as well, USDA is not allowed to wear both hats. But FHA I can't find the article, but if you Google like FHA, duly licensed, they changed that ruling I think in late 2022.
Oh, okay.
Yeah.
All right, I didn't know
And
that
if
part. Okay.
I'm incorrect, please let me know. I mean, these guidelines change all the time, but as far as I know, you don't need to worry about that in California.
Okay. Thank you.
Yep, you're welcome.
Question.
Yes.
So just curious, because the production piece, like I'm interested in doing this to have it available as an option. I mean, I
Yep.
don't want to, in terms of keeping productive, I don't want to distract from my real estate business that's significant.
Yep.
But I have the license to be able to start to do this if it's appropriate for the client.
Yep.
Is there a way to, I mean, so what would your recommendation be? Because I'm not going to be focusing on doing MLO referrals,
Of course.
but I could use it clearly in my business when it becomes appropriate. And, obviously that's going to get more and more as we go down the line.
Correct. Yeah. So right now where we are is, again, we look at Carolyn as a case by case basis, to be honest with you, but ultimately the V1 of this program, and we're going to keep iterating just, as we kind of move along. But like, if you think of it from our perspective, there's a lot of interest in this program. So we kind of want to make sure that like, it makes sense, right, for you, because what we don't want to do is if we do have production requirements and we don't have kind of, compensating factors to offset it. I mean, there's not a lot of production per loan officer. I just don't want to start raising questions and bothering you. Hey, Carolyn, what's going on here? What's going on here, right? So it really depends. If you get into a groove where you're closing like on average one buyer side transaction, for example, of 350K, or you're on track to close 4 million or whatever, let's kind of chat. I think it's probably wiser to chat at that point. However, if there's opportunities for you to be able to attract, or maybe you have a team, right? There's things that we have going on that we can talk offline that will maybe make it, make more sense of it, to have those compensating factors to ensure that it makes sense. But, I would say, Carolyn, to your initial thoughts or your initial remarks around, hey, like you don't want to focus on getting mortgage clients, right? Because buyers are your main thing. But if you think about if you're on the buyer side and doing a lot of buyer transactions, I think this is a great opportunity for you to really just talk about the mortgage side, right? And offer that buyer value. And a lot of it's conversational, right? Like I tell people, your external and internal loan officers, I look at them as a team, like currently how you have a team, perhaps like a team environment or team set up with your current loan officers. It's the same mindset, right? So there shouldn't be significant heavy lifting you're having to do from soliciting business, because the deal should be coming anyway. And it should just be kind of part of your conversation that, hey, by the way, I also am a loan officer. I have great insight on mortgage things and I work with a great team, whatever the pitch needs to be. I think it'll actually offer more value to your clients,
Yeah, I don't disagree. I tend to be, I'm more of a listing agent. So,
okay, got it.
But at the same time, if I'm doing an open house, it's certainly a wonderful resource to be able to put out there.
Yeah.
So I guess what I'm saying is maybe some consideration for those of us who are decent listing agents to put a benchmark in terms of if we do it if real, we at least 15 million a year, 20 million, whatever.
Yep.
Don't have that production required for
correct.
you.
And eventually we will get to that point, just so you know. But
okay.
As we're dealing with so many, right, and we're very extremely lean, where we want to say, all right, like let's focus our attentions here first. However, what I will say also is like a great opportunity for all of you, right, to try to test drive One Real Mortgage is to reach out to someone from our team, or we can connect you, whatever, just to try out a few deals. So now, Carolyn, what happens is before you put your foot in the water, you're testing out to say, all right, I have a couple listings. Let's see how it goes, right? Let's see if there's like a loan officer that can help. And if that makes sense and it works, all right, you know what? Like I can see this working. Then we can have maybe that might be a better option, Preston Miller, the man. How are you, my friend?
Hey, Samir. Good. Thanks for doing this.
Anytime. I'm going to hopefully be doing more of these, but yeah, thank you for hopping on.
A handful of questions that I wanted to throw at you. I know as soon as I put my hand up, there's a few people behind me, so I don't want to take up too much of your time.
Yep.
But there's a couple people in my group on the call. I wanted to clarify a couple questions that you didn't. I think I know the answers, but I just want to ask for clarification so people can hear it from you.
Yep.
But no crossover of any kind with the sponsorship network through the real sales organization versus one real mortgage.
That's a
Totally
great point.
separate.
That's a great,
network,
yeah, that's a great point. So think of mortgage as a separate entity and real broker as a separate entity. There's no crossover on sponsorship, completely separate companies, although we're all under the same umbrella, right? But as far as like the rev share, the sponsorships, all of those are completely separate. So if you're, in order to participate in rev share, you have to be licensed with One Real Mortgage. If you want to bring someone over, they have to be licensed with One Real Mortgage. Yeah, completely separate.
Got it. And also separate question. You mentioned the kind of like partnership between the external and internal LO.
Yep.
And just confirm. So two questions here. One, we're talking part-time versus full-time. Is part-time equal external, full-time equals internal, or just using those words interchangeably?
Correct. Right? So if you're an external loan officer, you're going to be a part-time W-2 commission only loan officer with One Real Mortgage. Our internal loan officers typically are the ones, like, think of them like a loan officer assistant, right? They're like in the mix. They know all the products. They know all the pricing. They're familiar. They know how to handle loans. They know how to talk to your clients. They know what questions come up, all those things. Those are always going to be our full-time loan officers. And if you have loan officers that are interested in coming to One Real Mortgage and they have a book of business where they're hitting that minimum requirement of like 8 million a year in production, mortgage production, we'd bring them over as a full-time loan officer. But at the end of the day, keep in mind, because they're W-2s, we hire them, right? So we go through the interview process, the vetting process, make sure they're the right culture fit for what we're doing. Like all of those things, we go through those processes to bring them over. So. Got it.
Okay, great. And then on that kind of pairing or that arrangement or relationship between the internal and external LO, does it allow for one external LO to have arrangements that are either the same or different with more than one internal LO?
Yeah, so we can, if the production is there or there's state carve outs where maybe they're not like, yours licensed there and they're not, typically we like to keep the same person, but only because like there's synergies typically that develop, right? And a lot of times what's happening now is a lot of the Real Originate loan officers who are our external loan officers are actually attracting over their loan officers that they work with, and they're working with them. However, we do have a lot that are here at One Real Mortgage who have licenses in multiple states. So typically we like to keep it one person just so it's easier to manage, right? And just kind of maintain that relationship. However, if there's an opportunity where it's like, hey, it's like we're getting flooded, we could have several, right? We could have a whole team just dedicated to your production.
Okay. And then I know you didn't want to get into the compliance on not paying revenue share on the part-time or external LOs, at least in 2024. It sounds like you're hinting that maybe that's available later. Obviously, that's potentially a big deal that's not available. I'm curious, like, maybe without going into compliance, but I mean, can you speak to like your long-term plans there?
So as long as, look, our attorneys have told us that they don't advise us to do it, not that we can't. And as this is a new program rolling out, it's probably best not to. If this opens up in the future and there's opportunities to do it, we will unlock, like we'll make it not gray anymore, right? We'll open it back up. But there's a lot of the environment currently today in real estate around the things that are happening are pretty much preventing us from, not preventing us, but are kind of steering us to say, hey, maybe it's not the right time to do this right now. And as we grow this out and get more proof of concept, it'll be better to do. But yes, I can't dive into it, but but that's kind of the thought process is, yes, we'd love to open it up, to be honest with you, right? Because I don't think there's anything wrong with it. We just want to make sure we do it in a systematic and way where, we're not getting questioned at every step.
And I'm sorry, I'll squeeze in one last question if I can. Like, if someone's interested, and they want to go forward, are the either part-time or full-time like employment agreements available to review in advance of going, say someone's already licensed, they don't need to go through that process. Just like and they want to get in the weeds before signing the dotted line. What's that process?
So typically we don't have that made for the public yet, right? Compensation agreements, but we do, if they're interested. I mean, the normal path is pretty much like, all right, let's talk to them. Let's understand what they want to do, interview them, and then bring them on board. And then we'll provide them at that point. If we feel like both parties feel it's like they're the right fit and everything works out, then we'll provide the compensation agreements for them to review at that time.
Okay. Sounds good. Thanks for taking all my questions. Appreciate it.
No problem. Terry, how are you?
Good, but I'm not first. Fabian's first.
Are you not first? I don't even know I can't even tell.
It's all right. Hey, Samir, just real quick, is the rev share aspect of of this program willable like it is for Real Broker?
Not
And
yet, but those are things that we want to work on in the future.
great.
We just rolled, so
And-
just so you all know real quick, sorry to interrupt.
No, go ahead.
We just rolled out Real Originate and our rev share program in December. So it's only been like 4 or 5 months. So there'll be a lot of still enhancements that we'll be making to these programs.
Right. Okay, great. And the other question, do you guys work on commercial loans?
Commercial, we don't per se. We're trying to figure out an opportunity there. But if you do need a good commercial lender, let me know. I have an excellent one that I can connect you with, and you can just work separately with that person.
All right, thank you.
Yeah.
Samir, how do we get this presentation to loan officers outside of Real at this point?
Yeah. So we have, so that's a great question. We'll create a resource center, perhaps like maybe in Reason or something, to put our attraction index in there for mortgage. So this one, for example, this is more targeted for real estate agents or people who want to join Real Originate, but we also have like a separate deck for Level Up, just kind of really speaking about our kind of who we are as a company and our rev share program. But that's a great point. I don't think we have a place where we have it. If you need something, obviously reach out to me separately and I can send it to you, but that's a great takeaway. I'll write that down and just make sure that we have a place for you to kind of, because we have like different things already in Reason, I believe, for mortgage. So it'd be good just to add a folder there as well for that. But yeah, good question. Preston,
I didn't see any other hands up. Can I squeeze one more in?
Yeah, go ahead.
Do we have a roster of our existing internal LOs? And how many people are on the team right now as internal LOs?
Yeah, I think we're sitting at about probably 30-ish. I know Reason was supposed to keep that roster updated, but I will find out to see if we have it somewhere. It should be, in my opinion, it should be in Reason. I know we're working on the One Real app, which will have like, the list of loan officers that you can work with, but I'll find out on that too. Good question, Preston. Thank you. Okay.
Just quick follow-up since you made that note, Samir. I'm sorry.
Yeah.
The roster with the state, our internals, our licensed in would be helpful.
Yeah, absolutely. Yep. Okay, Christine. Yep.
Okay, so sorry about that. You mentioned that in order to go into the program as like us as a realtor, et cetera, you're looking for a particular volume. What if someone like me, to be honest, it's like for me, real estate's been very slow, and I'm thinking that this might be a good avenue for me. Is that going to be hindrance if I said, okay, I didn't have much sales in the last year? So
Right. Yeah, no, good question. So we do like in our like when you come on as a loan officer, we do have production requirements, like minimum production requirements that are kind of at our discretion, right? But as we scale, we want to put guardrails in place. So we do have production requirements. Now that, obviously if the production isn't there today, like I completely understand, Christine, like you want to say, hey, this could be another opportunity to gain more production, to do more, whatever it may be. I think the position we're at right now is saying, all right, our main focus is on agents and loan officers that can come in and bring production in order to kind of help grow the company. Over time, we could open it up to people who maybe aren't producing as much, or we could change our production requirements. But essentially, to start off with now, since we just rolled this out in December, the idea is to kind of just right now focus in on, the production requirements of typically about 4 million in mortgage production per year.
Oh, but like let's say if I'm interested in this and I read everything over, I wouldn't need to have 4 million from last year to now. I mean, like just saying that, okay, you get licensed in New Jersey, etc. You do all that stuff. I just like going forward.
Correct. Yeah. Going forward. But again, like, so what we say is like, all right, if we haven't gotten there yet, right? Like, what are we at? Because like 4 million a year, like we want to make sure that what we don't want to come in and say, all right, we get you licensed, you spend money, you do all the things, right? Where you could have spent your time probably better with maybe real estate. So if you're not sure on the production side about generating, production there, my opinion is using real estate, right? Because that's going to be your top of funnel to drive mortgage production up, right? So you get the best of both worlds. So I would actually focus on real estate first, get that going. Once you get to a comfortable level where like, hey, I'm hitting like, minimum of 350K per month or whatever it may be a quarter, right? Like, all right, now I'm getting in my groove and now let me open a mortgage. Think of mortgage as another subsequent, like, don't look at it as your primary income for Real Originate purposes. Look at it as like supplemental income to add value to what you're currently doing today.
Okay.
Yeah. Yeah, Joseph. How are you?
Hey, I'm good, Samir. How are you doing?
Good, good, good.
So my question is, so let's say, because I've already been talking to a few lenders that I work with all the time about One Real Mortgage, and I'm not a licensed with
right.
Real Originate yet. Is there still sort of like a sponsorship where I know if I sponsor them and they join, I can't get paid right now, but then I do get licensed later on? Can I then
Great
start
question.
getting revenue?
Yep, great question. So we do tag it in our system. So similar to what on the real estate side, you have an LOI, I believe it's called, right? So similarly, we kind of, if we know that person came from you, we tag them in our system as you being the referrer. So if they're the referrer, then as soon as you get plugged into our system, yes, you can't get paid on what previously closed, but then going forward, they would be tied into your network. Now, as we scale and grow this out, what we will start implementing is like a 90-day rule, right? So if you haven't, we'll tag them for 90 days, but if you haven't gotten licensed for 90 days, then that quote unquote expires. We're not there yet, but just letting you know. But so obviously if you are attracting, it's obviously better to get licensed quickly and not wait for a period of time till like it's the 90 days have expired. But right now at this moment, we don't have a 90-day rule. It can be just, we'll tag them in the system and keep them for now, but that could change, Awesome. I know we're right at 3:00. Any other questions, feedback, concerns, anything at all? I know there's a lot in the chat too. Who I think 3 participants have their hands raised. Sorry, there's still a few more, right? Questions? Well, we can keep going, so don't worry about it.
Yeah, I just had one question.
Go ahead, Darius. Yep.
Gone over it already. So is there a requirement to get started, or is it open to anybody, or you have to apply?
So I believe, and I don't have it handy on me, and if someone can drop the link in the chat, there is a form, I think even in Workplace, even on our One Real Mortgage, I think Real Originate link, I don't have it handy, unfortunately, but there is a link. I think even if you go in Workplace, it's like if you to learn more, you can fill out that information, that questionnaire, it'll come directly to us, and then we'll set up time to have one of our loan officers reach out to you and chat more about it.
Okay.
Yeah. But if you go in Workplace and all like the different rooms, the break room, wherever, like you should see a link in there, if I'm not mistaken.
Yeah, I think I already filled it out. How long does that really?
Hold on 1 second here. Let me see. Darius. Oh, somehow I missed you. Oh, you're in Alabama, right?
Yeah.
Okay. I'll follow up today. Apologies.
All right, sounds good.
Yeah. So what I've been doing is kind of like having our loan officers reach out, but it looks like that one didn't get assigned. So I'll assign that out today.
All right. Sounds good. Thank you.
Yep. Yeah, Preston. Or Adrian.
Sorry, man. Yep. Well, first, I appreciate Daniel's answers in the chat tue. I just read he answered a bunch of questions, which is great.
Okay, awesome. Thanks, Dan.
Also, how should I ask this question? So just with some of like the wholesale relationships as a broker, like, maybe without naming names, but a lot of those wholesale relationships, of course, have a lot of marketing assets, materials, tools, resources. Obviously Real on the sales side provides a lot of that, but I wonder if any of that is worth speaking to, and maybe another time where someone going in with Real Originate not only has now access to their kind of sales generation tools through Real Broker, but also, the whole kind of, I'm assuming access, or tell me if I'm wrong, but I'm assuming like access to a whole different suite of tools that are maybe tailored, for the mortgage side that may also help with their sales business.
Yep. So we already have a marketing hub. We're constantly evolving it, right? And adding more content to it. But we do have a marketing hub for loan officers at One Real Mortgage who can go to, just similar to the real estate side, where you can go in and grab content, just closed, funded, like all branded, approved by Real. So we already have that in place. As we kind of move along, right? And as we evolve this, we're going to obviously have more marketing material around different things, right? Listings and, co-marketing stuff and things like that. So we do have some stuff already available today for loan officers. Yeah.
Okay, thanks.
Yeah.
Samir, real quick, this might be rhetorical, but are the full-time LOs only tied to work with Real agents?
No. Our loan officers can work with anyone. Just so you all know, about 60% of our business comes from Real agents. 40% come from outside of Real. So we can we work with anyone, everyone and anyone who wants to work with us. We don't have any sort of rules that it could only be real agents or real, like, that's not how we operate. We want to help all clients. So yeah, there's no restrictions to who we work with.
Great.
I don't know if there's any more. Okay. I appreciate everyone's interaction and questions. A lot of our loan officers, if you look in the chat, they drop their phone numbers in there too, what states they're licensed in as well. So if you have specific questions, feel free to reach out to me or them or any of us. We're all here to help. For MLG, we don't. So Jessica, if you have interest, reach out to even me. You can shoot me an email. There is a quick packet just to keep it more streamlined. Or if you can, maybe the easiest thing is if you fill out that link, if you haven't done so, Jessica, just fill that link out for Real Originate. We'll get that into our system and then we'll have you connect and send you out whatever you need. You're welcome. Anytime. All right, team. Thank you for hopping on. I appreciate the time, the opportunity. Any questions you have, don't hesitate to ask. We're here to help and obviously help you all win more deals. That's what we want to do. So thank you so much. Have a great day.
Thank you.
Thank you.